Philippine shares rallied for a fifth straight session, lifting the benchmark PSE index to a three-week high. Investors had been hunting for bargains since last week amid an extended Ukraine-Russia war and oil crisis that had sent share prices plummeting from early to late March. Some traders cashed in Monday, but last-minute buying saved the day. Trade was lethargic, but offshore fund managers are returning.
The Philippine equity market is still undervalued. Investors are recognizing the fact that number one, the markets are quite cheap. We are looking at least a 30% EPS growth across all the PSE index names on average. So for this year, so given that, assuming we are correct, we are trading at about less than 16 times price to earnings for this year.
Fund managers are betting on the reopening theme as authorities contemplate a further COVID-19 alert downgrade by April. That offset fresh worries over rising food and fuel prices that could narrow conglomerates' sales margins. SM extended its gains for a third day, recovering from being dumped by FTSE. The back-to-office order for BPO workers meant a return of investor appetite for property stocks.
We now like SM because there's a resumption of consumption spending. We also like Ayala Land and the Mega World continue to benefit from the resurgence of the need for office spaces.
Improving sentiment makes the equity market ripe again for another round of IPOs or initial public offering after a 2-month drought. There had been 3 IPOs so far this year: Housestock, Figaro, and Citicorp Energy REIT. 10 more are expected, including CTS Global Equity Group in April. The broker begins its offer period Tuesday, March 29.
Institutional investor, we welcome new IPOs and we're excited for new names to be launched this year.
Despite inflation rearing again its ugly head, traders find another support to latch on: central banks moving in a timely fashion. With markets still awash with cash, money will flow where it can grow. Lois Calderon, CNN, Philippines.